Good evening and welcome. I'm Epstein with your metal market wrap-up, and this wrap-up is for Monday, and we're at December 30th, 2024. It's just after 6:25 p.m. Central Time. In case I don't see you tomorrow, I want to wish one and all a Happy New Year. Thank you for watching me, and let's have a great New Year. That's what the game is about, right? Now, before we get into what went on today, let's take a look at the data that's due out in the morning. You're going to get the Red Book Group. They'll come out with weekly retail sales at 755. Case-Shiller's going to come out with their 20 metro home prices. That comes out at 8. In the prior month, they were up 4.6% year over year and off 0.3 month over month. Interesting to see if they start falling month over month. Pending home sales just went up if you saw the news today. So the question is, are buyers paying up? Are they getting lists? Are they coming in under? I'd like to see that. The API will come out at 3:30 in the afternoon with their data. Now, there are normal trade hours tomorrow. I was wrong. I thought tomorrow was one of the abbreviated days. Completely wrong on that. Markets close tomorrow at 4 p.m. at the Chicago Mercantile. That's Central Time, that's the normal time, but they don't reopen until 5 p.m. on Wednesday. So you get to have the evening off, get yourself wishing the Happy New Year, and then we will see you as the markets come in on Wednesday night. I won't be here, but the trade will be here, and I'll be back with you then on Thursday. Is that fair enough? But boy, I had that wrong. There's also going to be other things going on in the hours in January. In January, what you're going to have is now the service for President Carter, who passed away on Sunday. And he'll be sitting in the rotunda in Washington from, I think, January 7th through the 9th, and they'll have their funeral service. Then his body will go back to Plains, Georgia, where he'll be buried next to his wife. Good man. In fact, probably best known for all the things he did after he was president, more than when he was president. But when I look at it, the man had a rough road. The Israeli-Egyptian war was going on. If you remember the lines lining up for fuel, and I remember all that. So a rough time at the very least. He walked into a rough road, and a good humanitarian, a great one actually. Okay. So that brings us back to where we're at now in the marketplace at this point in time. And the one thing that was evident today is, well, Santa isn't out there in the sky that we're seeing, but he does have, think about it, he's got tomorrow, he's got Thursday and Friday to show up, because the Santa Claus rally doesn't end until the 2nd. So the 2nd would be coming up right after that. We have to remember that come the 3rd, we're going to see a battle in Congress as to who's going to lead Congress. The Speaker of the House, Mike Johnson, going to get the role, and who else wants it? That's the biggest problem. I don't see anybody raising their hand, oh, I can do the job better and I can bring everybody together. We're not seeing that. So this becomes a serious issue for the matter. Do remember, as I understand the Constitution, and I'm not a constitutional expert, anybody can become Speaker of the House if you get the members to vote him in. Doesn't have to be a member of Congress. When we take a look at the stock market, it tried a late day rally, gave that up, and you can see how the market is giving you right now a bit of a break again. The gold market is stable. Silver and copper got hit. And the question in copper, of course, is what's going to happen via China? Are they going to end up doing anything? The dollar got a bid today. And tonight you're seeing stability in the markets. Now, I'll be very honest. I told traders today, as I was looking, I said, I see setups. I saw a setup coming in sugar to be short. I saw setups in the dollar index. I saw setups in the other currencies. I said to avoid them. And the reason is I don't like trading right at this thin time. It's a way that you get yourself into trouble, and then when you want to be trading, you're fighting positions that may have gone against you, and you're wondering, what do I do? Don't need that. The year's either been made or it hasn't been made, and we'll leave it at that. When we look at the gold market, it is for the week so far. Remember, it's just begun. We're up 0.1%, and the market is under the 18-week average. So the bias of the market, as I define it, is to the downside. When we look at the charts here without any type of numbers on it or anything important, you had a heck of a break. The market gave you a bounce and you're pulling back, but it's not in a trend. You have a high that is higher than a prior high and a low that took out a prior low. A trend is normally defined as if you have an uptrend, higher highs, higher lows, a downtrend, lower highs, lower lows, and this is called no trend. It's searching for direction, higher high, lower low. The market's unable to make it back to the 18-day average, so it's been doing the fighting in this case at the 100-day. Do you see that? I don't see anything on this chart just yet, on a chart picture that would turn me to the bull side. If the market collapsed, 25.42 is in the picture. I say collapse because you're near the 26.20 level, but more likely the support would come in around 25.85 if it got that far to the lower Bollinger Band, opening the door up for the rest of that move, but you are oversold. Oversold is so important to learn to work with. Do traders deploy new money when a market's oversold? Does oversold become locked into a downtrend? Does oversold call for a correction to the upside? Many ways to look at it. I cover it in my enhanced Bollinger Band course. It's parts slow stochastics as well. At the end of this, I have a sale going on in my courses for the new year that ends this week. So it's not going to keep going. I hope you take advantage of it because it really shows you everything we're doing here with these swing lines, Bollinger Bands. There's one part you don't see here, window envelopes and more moving averages. And then the slow stochastics. I only believe in 5 indicators. Each one builds on the other and acts as a filter. I'm looking actually for reasons not to do something. And when all the work says no, you should be doing something, that's when you make your move. The gold-silver ratio continues to climb, which means gold is stronger than silver. Each time the numbers go up, you have to use more silver to get 1 ounce of gold. And if you take a look at silver, you can see the difference of the trend. It is a downtrend. Lower highs, lower lows. Again, very oversold. Might make a run to the 28.68 level, which is the lower Bollinger Band. And resistance, if it doesn't do that and it wanted to get short covering going or new buying, 30.58 to 30.88 is the resistance points, with for good measure the 31.34 level roughly, the 100-day average. In the copper market, we've had a bear market bounce, but the slow stochastics, what are they doing? Well, you can't count them tonight because we don't know if both numbers are going to stay under the 20 level. But we can most certainly see that today, Monday, both numbers closed under 20. They were both under 20 on Friday, and they were both under 20 on Thursday. Therefore, rallies in this market, in my opinion, are getting sold by the pros. They're looking for the market down to the 403 level. I would say they'll bail if the red line closed over 21, and it's right now at 10.07. In the platinum market, you're under the lower Bollinger Band. Now, you only stay under Bollinger Bands typically 5% of the time. So when you get under it, why are you playing to be part of the people that are going to say, oh, this is the one where I'm right for that 5%? Let the market pull back in if you're looking to sell it. What do I think? I think that the pros cover against Bollinger Bands if they're short, and that's what I think went on here, and you are oversold. Last but not least, the dollar index still with higher lows. What about the higher high? Well, today you got to 108.18. If we come in here and we take a look at the prior high, it was 108.07.5. And I'm showing that because it doesn't look like it on the chart. But it's clear with higher highs, higher lows. It's an outside day up. Do you know how to work with outside days? Real important that you learn that. So what I did is I said, hey, we're going into the beginning of the year. Let's give people that want to learn this technique that I use the opportunity to do it. So we have our charting course sale. You purchase, if you want, my core course. And by the way, that course is normally $599.95. I've cut the price in half to $299.95. Got it? Then you choose from a free Bollinger Band or an outside day course. Included with all this are all the goodies. The course, by the way, the Bollinger Band or outside day, on their own would be $120. So if you were to buy all this, you'd be well over $700 in value. And we throw in my research with it for you. We throw in a value of the charting software and so on and so forth. So Might want to take a look. Another thing you can do, you can buy it and bank it. In other words, if you purchase it now, you can take it anytime you want down the road. You can give it away as a gift to somebody. You can keep one of them for yourself, give the other away. Your call what you'd want to do. All you need to do is go to iraepstein.com. Right, what you see there. On the top left, you will see it, or move your cursor up to the top here if you're on a PC, and you'll see an icon. Give it a click. It'll take you right there and explain how everything works. In the meantime, I'm Ira Epstein. I will be with you throughout the whole day tomorrow. I don't know how I saw that wrong. I thought we were closing at noon tomorrow. You would think so with everybody running around trying to go out for New Year's. It's not the case, so I'll be here. You take care. See you in the morning.